just a second, guys. All right, we should be good to go. Good morning, everybody. So we had a bit of a move in the Europe Open, the kill zone, but price didn't necessarily move back all the way. Still, it's a great mean reversion play. If you don't sleep all night, that's a good one. Or if you're in another country, it's always worth looking at. Otherwise, NASDAQ is flat. We got Japan down close to 1%. Small caps down a quarter. It's a mixed bag out there. You know, Europe up almost as much as Japan is down. We're not really expecting much out of Barkin. I mean, he's going to chip teeth, but it's likely he's not going to say anything revealing. Services PMI should be fine with that number. We'll see if there's any warnings or discrepancies when we get into the charts. If we see like a market maker move or something like that, it might indicate that they know something we don't. You know, there's always that context of smart money, and really, they just have more resources when they can dedicate, 2 or 3 trading desks into digging out information or risk over the next week. Then they get to highlight more opportunities and more risk and can better prepare for it. That's usually, from what I've seen, about as smart as it gets. I haven't heard anything on this policy meeting on whether or not it's supposed to have a lot of impact. Moderate. So a little bit of threat this afternoon. Otherwise, when we get through lunch today, we should be good to go, right? Shouldn't have any real issues into the afternoon session if you're looking to do some 0-day plays. But with this, you know, if they're going to have reporters in there, if he has an opportunity to get quoted or misquoted or any kind of gotcha statements, then the threat goes up. And then of course it's just him, right? He can just say things that spin the market out of control. So that's at 2:30. Kind of a little heads up on that one. NVIDIA made some waves yesterday and a little bit out of AMD too in the afternoon. Had that event. And yet we really didn't see much follow through on them. Not a lot of change between pricing in a Fed rate cut for January. Looks like they're decreasing a cut uh, for March, kind of unwinding it. Now, like I said yesterday, keep your eye on those, especially after news events. See if it really shifts the needle. So far, I haven't seen anything start to come through. Continue to keep my eye on this Bitcoin play. It broke out of this wedge to the downside. I thought maybe we would get a Busby out of it or something, but we expanded far farther than we should have, and kind of hanging out down here. On the daily, it looks textbook: lower lows, lower highs. Then now we're getting that little bit of a breakover. So we'll see. Maybe we're going to put in some sort of scoop pattern here, get back up a little bit. Now, this isn't, this is an ETF. So, if you're looking at the real deal, probably looks a little different. Still, it has a lot of work to do in the bigger context if you are looking at Bitcoin. All right, so that's the big move that I was talking about right around the Europe Open. There's this window in time that research has highlighted over the years called, I've heard it called the kill zone. I didn't name it that. It's just it's what it's called. It's between 2 and 4 a.m. What the research was looking for is the biggest move in the market consistently within a 2 hour time frame. Well, by default, you would think that would be something like the open or, the maybe the last 2 hours of the day. And it turns out that consistently, if you're looking for the biggest moves in the market in a 2 hour window, it happens between 2 and 4 a.m. Eastern time. So if you live in California, don't bother reaching out asking me if it's California time. No, it's not California time. That always makes me chuckle. Like anybody in their right mind wants to base everything that they do on California time when it comes to markets. Well, we're going to just randomly start using Ohio, Wisconsin. At least Tasty had a good argument to use Chicago with the CME. So we are inside day. That inside day did escape Friday's range, right? We were talking yesterday about how it was likely a hurry up and wait day and to play the reversal. The first play of that reversal worked out really good. And then after that, it just ran right up. So if you were running a defense play when it broke out yesterday, had a nice 1, 2, 3, 6 reversal and played it down, capture, a good 5 to 7 points. After that, hopefully you got the heck out and didn't get run over when it made another run. Right? That initial breakout that came back in. This one. So we did come back in. Today we're sitting inside. The base case is still the same as yesterday. If I know there's a lot on the screen here, but kind of follow these blue dashes. That's the 10 period daily moving average. We're looking for that crossover. Yeah, thanks for the tip on that. Let me check. That's what I was worried about this morning. That's why we started a little late. Um, Tell me if that changed anything. I bet it did. I know there's going to be a delay, so I'll just catch the thumbs up when you throw it. If that didn't do it, we'll try something else. So we're looking for this short of a shift, right? We're back above the 10. We're back above the 3. The idea is we want to keep it and come back up and re-challenge that high. We are making higher highs and higher lows, so that's what we want to continue to focus on, right? You see, I turned it down a little bit yesterday. I was spiking into the yellows, so maybe I turned it down a little too much. So what I've put on here is just a measure from the top to the bottom, marked out the half back. We're above the half. We need to keep that. 69.32 cog line is pretty much my default. I don't care that the line's at 29. I'd rather run the cog line, but it works, right? Like it's fine. You do you. If you want it perfect and exact, then draw the line and worry about where that line is. We have a 310 cross from yesterday. The white line got above the blue line. That's the 3 and the 10 crossing. It was only able to do that because price crossed, right? That's how it works. You get the crossover in price and then it drags it up. Well, you shouldn't have had to do that if my adjustment worked. Was kind of the point, right? Did my adjustment work so that you didn't have to put it on a TV and max out the volume? Now that we're inside day and we're still waiting on whatever the market seems to be waiting on this week to make its move, then we're going to focus on the same thing that we focused on yesterday. Maintain the range, sit inside this, and if we break the 3, aim for the 10, get through the 10 for the 20, get through the 20 for yesterday's low, and then we'll challenge Friday's low. It's level by level, right? Flip it over, take it the other direction, challenge the Globex high, take out yesterday's high, and then it's game on to the upside. And we'll worry about those bigger levels from back here, right? Because it's not like we'd be at all-time highs. We still have these to deal with. Now, this morning we had some really interesting changes in the cumulative delta. First, on that sell-off, the recovery in cumulative delta jacked way back up through this level plus some. Then, when we were hanging out here in this area, right before I started my stream, we are kind of hanging out here. The cumulative delta broke out before this breakout and started running. It was a beautiful play. I don't have the screen on this computer. It's on my other computer. If you don't know, I run 2 computers at once. 1 keyboard, 1 mouse, 2 computers. On the other computer, I'll put it in the chat so you guys can see it. The cumulative delta's got a really nice follow through right now, and price is matching it. Textbook crossover. Now we've got the VWAP that we can focus on for what I call reciprocation. Take the greatest distance from VWAP or moving average or pivot point or whatever you want to use when you're doing reciprocation. and then set it on the other side. So that's going to get us into 69.65, right? That would be an inside day breakout of yesterday, and it ties up really nice with my 111. Is it still low, huh? If it is still low after that, then the only thing I'm going to do is give this thing a little reset. It's a USB headset, and sometimes it just needs. Sometimes it just needs a reset. So we'll see if that changed. That did it, huh? All I did is turned it off and turned it back on. But you know what? If it works, all right. So I am looking for another inside day. The expectation is that if we do break out, that we're going to come back in. So 111, 1, 2, 3, 6, play the reversal, bring it back in. And if it's wrong, if it breaks out and it continues to go, take that small loss, right? It's a slap on the hand compared to what we would get. Because if it breaks out and it actually does run, we'll make our money back on that run. The run has the potential to get up into 69.92 cog line. I really like that as a target. But, it always comes back to why would we run? Well, why today? There's nothing on the table that's supposed to give us that run today. ADR is fine. We haven't gone anywhere, right? We're at 0.05, so we're basically flat. After all the running around last night, shenanigans, we're right back where we started. This midpoint in our own Globex has a little bit to offer. Now that we're above that mid, kind of want to keep it. Just need to bring this stop up. So I want to keep that mid. 42 is an old school cog line. We really don't use that much anymore, but when I see it, it kind of just it's there like a memory. So we could undercut 44, which is the midpoint, get back down into 42 and hold that like a Busby, retest again. Think of this spot right here as a liquidity gap that needs to be closed. And I'm pointing this out because we might only go up to hit this point. That's 69.53. Whatever dropped us down in that move right there, it very well could still be negativity that's weighing on the market. And sure, we're going up, right? We're going up. But are we going up just to close that gap and then we're going to go back down again? Or are we recovered from the gap, whatever caused it, the market shook it off, and we're going to continue to go beyond that gap and go even higher? That's really what I'm focused on at the moment. So the long target is that gap, 69.53. Let's get there, figure it out, see what it wants to do yet. I got a front run order to get out at 52. I'm not trying to make it all the way there. You know what I mean? I don't care about getting it to the tick. Just want to get mine. I know you don't see a gap. It's a liquidity gap, right? Today's floor pivot is higher than yesterday. That's bullish. Price opened above it. That's also bullish. We touched it and then stayed above it, and that's also bullish. So we don't have an MDP. We tested the floor pivot and the lower edge of the floor pivot channel. All of that held. and we're still riding above the floor pivot, and we're above the weekly pivot too, so we still have that as a bullish bias. There really is no reason to have a heavily negative bearish bias on the market right now. There's a lot of bricks in the wall of worry for sure. I don't think anybody's arguing against that. But this isn't lining up as a bearish pattern, right? We're just sideways since November, just in this big range. We got to get out of the box before we do anything else. All right, we got the S&R lines. S1 is still inside of yesterday's range, but we would have to get through both of these floor pivots to get to that S1. R1 is an inside day breakout, and it's higher than the 111. It might be right up into that 1236. Well, I'll tell you, it's higher than 111, but just barely. So 6970 or R1, it's right there. Players bet if we get the breakout, that's our reversal, right? That's what I'll be playing anyway, is the 111 reversal, if we even get up there and get that breakout. Looking at things from this perspective, if we break this Globex low, that 69.31 cog line, then run it to the quarter, which is the weekly pivot channel top. That's target 1, target 2, target 3, which is also the 20 period, right? It's level by level, run it all the way back down again. Now, today's floor pivot channel is significantly wider than yesterday. It's not a big channel. It's just way bigger than yesterday's. A narrow channel implies if we break out, it can stick and we could just really run. Wide channel implies if we break out, the breakout probably fails and we come back in again. Now, it's not, price isn't moved by these channels. So these channels won't make us break out. They won't make us keep a breakout. They're just giving us insight on what should we expect if we actually did get a breakout. While this channel is bigger than yesterday's, it's kind of narrow. And it does imply that if we break out, we could keep it. There's certainly a path of least resistance is to the upside. All right, we don't have a lot to go on yet. All right, this is for the week. The point of control right now is lined up really well with last week's point of control. We've already talked about these speed bumps overhead if we do make it up there. Even the move right now to 69.50, it's putting us right into this trouble spot. But it is worth noting that the trouble spot itself isn't the final destination. This entire range is. So that gets us almost up to 60. It's a 20-point playground, right? And it was the same thing last week for Monday and Tuesday. That same scenario. We spent in that range building it out. We put more work in on Monday and Tuesday than we did the rest of the week, really. So let's get out of this 20-point range for the bigger move on the week. If we go back out of it to the downside, then the expectation is that we do a lot of what we did last week. And the same thing the other way around. If we can get through the top of it, I really like 7,000. But we got to get through the top of it, not just that line, right? And then, of course, if we do get out, we got those speed bumps here around 62 and then here around 80. The concern is that there's still a lot of liquidity on the table and we're not going to be able to absorb it all. So you want to watch the tape when we get up into that area, see what kind of shenanigans they're running, pulling and stacking, what the tape speed does. Is it picking up? Do they start running like a sprinkler program? What are they doing, right? It would really only be helpful during that trading day, but it'd still give you the insight, figure out what we're going to do on that breakout. 10-day, 30-minute volume profile in TPO. The TPO is on the right in blue. Really, it's a much cleaner profile right now than what we're getting out of the volume profile. Point of control on both is lined up well. We can see the structure at this 6980 that we were talking about. It shows up even here. Yesterday we were talking about how this could move down into 6930, more of a default reaction than anything else, and it's still on the table. I don't see why not, right? So if that fails, we tested it yesterday, it held. If we try that again and it fails, then we're going to try the next cog line, 6911, and then we get through 6900 into 6892 cog line. We can already see how we're setting up lower highs and lower lows, but this is a much smaller time frame. And we need a full set. We've only got one of each. We broke this low with a newer low, so that's our first lower low, and that's our first lower high. We need two. So if we turned here and went down, that would be our second lower high. And then from down there, we'd have to turn up, and that would give us our second lower low. We need a full set to have a trend, and we don't have a trend. We don't have a full set. We just got two, and it's a small time frame. Hey, that's a nice fix. Yeah, just drag the slider back a minute. Was you able from that to go and then get caught back up again? Or did you have to stay a minute lagged? That's a good fix. All right, this is the 5x5. You can really see the work that they're putting in last night. They really got ready for Europe to open. Then that big dump that I was talking about, now we're just trying to run back up and get that gap closed. The concern here is this point, that 69.53, and that high volume node right there. They're in the same spot. We don't have a lot from yesterday other than yesterday is the classic P-shaped profile. You can see, the narrow tail at the top, the point of control. Everything is turning around just on this time frame. We really don't have much to show for it. We need another couple of days to really see that bigger curve that's in here. And of course, we need to keep it. All right, the weekly expected move for the week. We're halfway to the green line already. The range this week didn't give us any great clues. If it was a little narrower, we'd have a stronger conviction for hurry up and wait. If it was a little longer, we'd have the expectation that the markets were pricing in an expansion. But we're in that wishy-washy state where it wasn't too small and it wasn't too big, and so it's not really helpful. It is what it is. Take it when we can get it, when it has something to offer, and then when it doesn't, well, whatever. We didn't need it. 1.3% above the 10 week. We're starting to move up a little bit. You can see the trend that we've been putting in here, right? And through most of the later part of the year, I'd say from October on, I've been looking to break over this level and start getting into, 3, 4, and 5. We're talking about 3%, 4%, and 5% above the 10-week moving average. That's what I've been looking for, and we haven't got it yet, right? Obviously, we're still hanging out and we're putting in these lower